Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Paul, what's happening, man? You got a new hat.
I did get a new hat. It's it's pretty comfy. It's like a golf hat, even though I don't golf.
Don't you love wearing like golf? I like wearing golfing attire. I just think it looks really sharp, but I don't golf. Yeah.
It's pretty spendy. This hat wasn't, but it was like $25. But yeah, this is from our neighborhood that we're moving and building a house in Tennessee. So
Nice.
And then I got my Tennessee shirt on here for YouTube watchers.
Nice.
So yeah, it's good.
Going
Nice
all
people. We checked out the town and real down to earth, friendly people, and nice little downtown. You know, like they still have the original buildings there, and there's little knick-knack stores or cafes, and so
A lot of charm
to it.
Yeah.
It's got some charm. Yeah, absolutely, and that's kind of what we were after. So
That's cool. Yeah, I've got a coach baseball with a guy who's also a contractor. He came by today. He's from Tennessee. Nice guy. Down home, got the Southern accent. You're going to start talking with an accent in another couple of years. We're going to hear it.
Yeah, buddy.
Yeah, that'll be funny.
Gotta fit in.
Yeah, you got your Boston accent or whatever, that Massachusetts accent mixed with Tennessee accent. You're going to be
no one will understand me.
You're going to have an identity crisis on your hands. Yeah. Well, good, man. All right. Well, hey, today we wanted to talk about a big question. In fact, I just had this question this week where somebody, talking to somebody new to the concept. They most likely haven't read Nelson's book or haven't read it all the way. And one of their questions is, well, what's the cost of doing this? And there's so many different ways to answer that question, but my favorite way to answer that question is the Socratic method and answer it with another question. Paul, what's the cost of not doing this? Because psychologically, we're all, I forget what that's called, and I don't know if we talked about it before, but you're more human beings are more apt to worry about losing something, than being happy about gaining something. Right. So the idea of losing what you have is way worse than gaining something that you don't have. So let's focus on some of the things that you won't have the ability to do and the costs of not doing infinite banking. So
Okay. I love this angle.
Good. Yeah. Why don't you start with the first one?
Yeah. Well, first and foremost is, we've touched about it a lot on this podcast because that's part of this conversation about IBC is about control and control over the banking function. And when you have that control, you have power and you play by your own rules, not the banker's rules. And until you've experienced that, where you can just, I'm going to go finance that widget over there, and you cut a check because you have the cash value available, it's incredibly powerful. And most people, though, Dave, and we were talking before you hit record, that they don't know what they're missing. And I think that question that is often asked of us early in the process of what does this cost? That's the wrong question. It's coming from a position of they don't understand what IBC is yet. And that's okay. But that's really an indicator to us that, okay, we need to tailor this conversation to where it needs to go.
Actually, absolutely. And, people are always worried about what do I have to give up to get this? And instead of focusing on what do I have to gain by doing this?
That's right.
Right. So if you always look at seriously, what's the cost of not doing it? How much, there's a difference between cost and value, right? Or price and or price and cost. Like, this is how much you have to pay, but this is the cost. right? So I think, like you said, operating under somebody else's rules, you won't have the ability to make your own rules because, like we always say, the banker gets to make the rules.
It's the golden rule.
Yeah, when you have the money, right, you get to make the rules.
That's right.
So yeah, so you give up that ability of making the rules, and now you got to play somebody else's game.
Yeah, but that's how we've all been programmed to live. It's just the way it is,
Right.
which is why this seems so foreign, right, to most people, in the wide, wide world out there. That's why, if you look at the percentage of Americans, adult Americans, practicing IBC, it's a fraction of 1%, probably,
Yeah.
right, or maybe even less. It's
Yeah.
not that many, but those that are, when you know. So
Right.
it's a better way to live, though, I guess, is the point I'm trying to make. It's a more comfortable, less emotional way to live when it comes to finances.
Yeah. Far less emotional. Right. So here's another thing that you can't do. One of the costs of not doing IBC is being able to multiply every dollar you have. Give every dollar you have more than one job at the exact same time. Like there's very few places you can actually do that because everything's mutually exclusive. If you want to use your dollar here, well, that means you don't have the opportunity to use it over here.
Right.
Right. What
Yeah.
this does, it allows you to do both, right? You can use your money in two places at the same time.
Yep. A good book, the way to think about it is it's an and asset. It's not a this or that decision. And a lot of people, again, when they're first getting into this, they're approaching it from that assumption because they heard it from their Uncle Bob or some other Yahoo who doesn't know what they're talking about, that you can only have this or you can invest. You
Right.
can't have both. You can't possibly, you're sacrificing this to have some of that. And of course, we've talked about it before. The only way in which that is actually true is in the early years when you do sacrifice a little bit of liquidity.
Sure.
For
So
long-term
yes.
benefit, though, right?
So what do I have? What do I have to lose? Well, you have lack of liquidity for a few years or a reduced liquidity. Reduced,
Sure.
not lack of, because you have immediate liquidity with a cash value, but you have reduced liquidity for a few years before that gets returned to you. And now you're ahead of the game and you always will be for the rest of your life. So yeah, there's that upfront cost, if you call it a cost, which is, it takes some discipline. So it's going to cost you discipline. That's for sure.
Sure.
Yeah. And a long-term mindset.
We've referred to this before, but I like how Ryan would put it in that, if you had two people doing the same thing, but one of the guys was doing IBC and the other wasn't, the other guy's going to be ahead at first, but after a number of years, the guy doing IBC is going to run away.
Yeah.
Just mathematically, he's going to run away.
Yep, not even close. Not to mention all the intangibles of maybe extra opportunities that have come his way that the other guy didn't get because of access to capital and being able to put it in two places at the same time.
That's right. That mindset shift is super. It is an intangible though. It's something you can't illustrate on a piece of paper. Can't maybe explain in a book necessarily that well either until you got to be doing it.
Yeah, I want to go back to what you said. We've been trained to think either or. You can either have this or you can have that. It made me think of every time I go to like Panda Express, which is once in a blue moon, but man, do I love it.
Anthony loves Panda Express.
Panda Express. So you go there, right? And you get yourself a combo meal and it says, do you want rice or noodles? What I say every single time is, I want both. Like, give me half and half. And they say, okay. I don't know why they don't put that on the menu. Like rice, noodles, half and half.
Right.
Because they say yes every time.
Of course.
So it's not mutually exclusive. You can get both. So,
and I think that's a good call because they're both pretty good.
They're both very good. And I like to mix them all together with the orange chicken.
There you go.
I'm hungry, man. Let's hurry up. Dinner time. All right. What's another one?
So did we talk multiple uses? We did, right?
Yeah, we just did.
Okay. We talked multiple uses. How about How about living benefits? So we're talking about dividend paying whole life insurance and the process of the infinite bank of IBC, infinite banking concept, right? So what do we have because we own dividend paying whole life? What are
We
some of
have
those living benefits that, and we put this in parentheses in our notes, folks, because we want to just kind of expand about it so you're not left, well, what are the living benefits? Can you remind us? We're going to remind you.
well, we know what the permanent benefit is, and that's the death benefit,
Yep.
right? Permanent until the day you graduate, till the
Right.
day you
So
graduate from this earth, and then it pays
what's
out.
what is the death benefit?
What is the death benefit?
Yeah, it's something.
Like,
So you policy owner, you own a policy on your loved one there. They graduate, you get the money.
yeah,
That's what the
and
death benefit is.
income
I just
tax
dumbed it down.
free.
Just
Yeah,
income tax
income
free.
tax free lump sum of cold hard cash or dripping
Sweaty,
sweaty wad of
sweaty wads of dripping wet cash. That's right. So
yeah,
anyway, I didn't mean to dumb it down too much, but sometimes there's people that just maybe they forget because they haven't listened to those older episodes. But
yeah,
yeah, very basic.
yep. Good point. So you got the permanent death benefit, but you also have the living benefits, which is why, in our opinion, it's called life insurance, not death insurance, because
That's right.
there's a lot of living benefits. I mean, we can rattle some off real quick, like uh, uninterrupted compound growth, and all that growth is accessible tax free for the rest of your life.
Yeah, access to cash, access to the present value of the death benefit. Death benefit.
Right. Or, your equity in the death benefit, your ownership of the death benefit at any given time.
Except you don't have to go to the lender to get permission to access it, do you?
Right. You just say, I want this much and I want you to put it in this account. And if it's that much is available, that's what you get it.
That's right. No
Exactly.
questions asked.
Um,
No fees.
no fees. You get privacy. So nobody,
How
it's
much
kind
is
of
that worth now?
right. And I think it'd be pretty hard for somebody to research to find out how much cash value you have. Right. I don't even know how you could find that on somebody without asking the company, and why would they ever divulge anything?
They're not
They,
obliged to.
they can't. Yeah.
That's right.
So nobody knows how much cash value I have except me and the insurance company. And only the insurance company knows how much cash value I have with them,
That's
because
right.
I've
They
got
don't.
policies with
That's
a
right.
couple different ones.
That's
So
right.
yeah. You're protected in most states from creditors trying to sue you or even bankruptcy. That cash value is protected. Kind of like I think a 401k is similar to where that cash might be protected. I think in many cases. Um,
Yeah. Yeah. I wonder if it's because the 401k is kind of like not your money right now.
yeah, right. The
It's your
government wants that.
custodian. It's your custodians.
Yeah, right. Just like
But I don't know.
just like the money you put in the bank is the bank's money.
Yeah. Or your premium that you pay to life insurance company is actually the life insurance company's money. So
Right.
maybe it's a similar relationship. I don't
Yeah,
know.
maybe.
Legally, but
Yeah, maybe because you don't
um,
actually own it.
but again,
So
this is a private contract. It would be hard unless you were out there blabbing about it to discover that you had this asset in the first place.
true. Yep. Good point. So I mean, so many intangibles, and we'll hit on a few of those intangibles as the living benefits as we go through this list. So, here's one thing that one cost of not doing infinite banking is at the end of your life or your loved one's life, nobody gets to recapture all the taxes you paid over your lifetime.
Right.
And that's just one way to look at this. So that income tax free death benefit really will replace all the taxes you paid over your lifetime, if you think about it like that. So what's your plan to recapture all the taxes you paid? Well, this is my plan. My family's going to get way more than I ever paid in
More.
taxes, and they're going to get it tax free.
Right. Yeah.
Right?
Way more. Yeah. Absolutely.
So I was doing some research, and one census study that was conducted said that the typical American will earn $2.7 million over the course of their working life. So if you figure 40 years of working, average comes out to like 67,000 a year or something like that. Gross income. So before taxes.
Sure.
After taxes, I'm not quite sure. I couldn't find the number on that, but I think it's pretty safe to say, and everybody might have their own opinion about this. We probably pay upwards of 40% in taxes, maybe even 50% to taxes um, from our gross earnings. If you think about, like, don't just think income tax. Like, that's easy. You look at your income tax, like, oh, I paid 25% was um, my tax liability for my gross income this year. You
Yep.
got state income tax, which is a little more, which is less than federal, but still hefty in the state I live in.
Yeah. What is
Uh,
it up there?
10 up to 10. It's
It's
awful.
up to
It's like
10.
one of the top three worst states in the country.
Yikes.
Yeah. But think about all the other taxes that you pay. Go to the gas pump and read the sticker on there that shows you how much of every gallon that you pump is taxes. I think in Minnesota, it's somewhere like something like 47 cents of every
Easy.
gallon goes to taxes.
Yep. No
Um,
question. Well, you got to
yeah.
fix those roads, right?
Well,
I'm sure it's just going to the roads.
they are really, really bad roads. But then I don't know. Look at your cell phone bill. You got ridiculous taxes on there. If you get
Yeah.
an, I just discovered this looking at an Uber receipt like a couple months ago, a ride, catching a ride to or from the airport. There's an airport tax
Airport tax.
on top of your Uber fee. Like, think about the little taxes you pay here and there, sales tax, property, everything else. You're probably
Yep.
paying easy 40 to 50% of your income in taxes.
And let's face it, folks, you, the consumer, are paying for that.
The consumer pays all taxes.
You pay all the tax.
Yep.
One
Absolutely.
way or another. Whether you believe that or not, or see it or not, you are paying for it. I mean, hotel, city tax, state tax, sales tax, or sales. I think we have a tax on food here in Virginia.
Yeah. The only thing we don't tax here in Minnesota is clothing. So there's people that come across state line just to buy clothes because there's no tax. So why that is, I have no idea. But I'm not complaining about it.
I think you're right. Probably upwards of 40 to 60%, depending on who you are, is when you consider all tax.
Uh-huh.
It's property. I mean, property taxes in some states, Jersey,
Yeah.
Connecticut, Texas. I mean, it's a huge expense.
Yeah. So think about
New
that. If
Hampshire.
you could recover all the taxes you pay over your lifetime, let's say it's 50%, you make $2.7 million. It's 1.35 million of a death benefit payout. That's all you need to recover that. By the time you're 80, all of our clients are going to have well over $1.35 million in death benefit. It'd be darn near impossible not to have more than that.
Yeah, I really like how you frame this discussion, Dave. Just puts things in perspective that, oh wait, I can get it all back.
You can get it all back, or at least your family can get it all back. Yeah.
Yeah, you won't get it all back because you won't be here. Sorry.
Hopefully you'll be in a much better place.
Yeah, no doubt.
But yeah, your family's gonna be able to get it all back. So pretty cool. All right, man. What about well, let's talk about interest. We talk taxes. What about interest?
Right. Well, folks, if you open up your book, Nelson's Becoming Your Own Banker. He explains the average American man, 34.5 cents of disposable income going to interest to finance charges, essentially, right? To other people's banks over a lifetime. So one of the biggest intents of IBC is to recapture the majority of that interest so that we can make what the financial institutions are making off of us, right?
Right.
And if you can do that, let's say you can recapture 28% of it or something. Well, gosh, that sounds like a 28% rate of return.
Yeah. What if you just recaptured 5% of that interest?
I'll take that.
Like, that's 5% more that you're not paying out to somebody else.
And when you compound 5%,
yeah,
year after year after year after year, over a 40 or 50-year period, it's gonna be a large amount of money.
And why, when Paul says when you compound that, when your cash value shows up, it cannot decrease. It will only increase, and it will increase every single year from guaranteed growth plus dividends, dividends aren't guaranteed, but they've got a pretty darn good track record. Anything with over 100-year consecutive track record is pretty good in my book. Um, but those get added to the cash value, and then next year you get paid on the growth of that from the previous year.
Yeah, the dividend. In other words, the dividend's going to get bigger and bigger and bigger. And we've talked about it before, but the illustrated dividends become quite enormous as the years tick by.
Yeah, like
Many times what the premium is.
Many times.
Fact.
So
yes,
it's much more than just
that.
a return of premium.
Oh gosh.
Yeah. If you think that's all you're getting back, that's not the case.
I don't know how they're allowed to say that. I mean, it's technically true, but not actually true, I guess.
Not accurate.
Yeah.
Technically, inaccurate. Yeah. Right. So there you go. What about, we talked about giving every dollar multiple jobs.
Yeah.
But what if you could recycle the exact same dollars over and over and over, putting them to work throughout your lifetime?
Yeah, it sounds like you'd be infinitely more wealthy.
It sounds like you'd be an actual banker, because that's what banks are in the business of doing, reselling money. That's all banks do, resell money over and over.
Over and over and over. All the money you store there.
Yep.
They're selling it back to you.
Yeah. So how does that work? When you pay your premium, it generates cash value. That cash value never goes away. It's always there working for you, whether you're leveraging it to use somewhere else at the same time or not. So anytime I take a loan from the insurance company, because basically that cash value creates an equivalent line of credit with the insurance company, I take a loan from them to go do my investing or purchase my cars, my big purchases, finance things of life, right? Every time I pay $1 back to that loan, that dollar is now available for me to use again. I'm recycling the same dollar over and over.
Yeah, I like the analogy of, I always tell people it's like a revolving door. Right? The money's going in as premium or loan repayment, and a few rotations, it's coming back out and it's going to go do something else. Whether that could be the life insurance company using it to buy bonds or to do some other opportunity, or it's me again.
Yeah.
Right? But
I like
revolving door of money. I love it.
Yep. I like it. What about now here, let's get into an intangible. This is one of the funnest topics. We've had episodes fully just on this topic alone. Maybe I'll look that up while you're talking, but the intangibles of seeing opportunities that you otherwise would not see. And why would that be the case, Paul?
You're not looking.
And why aren't you looking?
Well, if opportunity comes to the well-capitalized individual and we are not well-capitalized, I guess we could, do you own a weed whacker? No, I can conclude, I think it uses weed eater is the word he uses. Yeah. But we can conclude, if you don't know that, you need to buy Nelson's 7-hour DVD series, or 6-hour, whatever it is, 8-hour, whatever it is, and watch it, because he makes a joke in the first episode fairly early on. But it's kind of, you don't know what you don't know. You don't know what you're missing, because most people, again, back to the programming, they set their 401k contribution on autopilot or their IRA or whatever. That's fine. And they're not looking for that next real estate deal or the next, and they're not being offered it because people, let's say like us or people we're associated with, don't know them.
Right.
Because they're not in the circle, because they have nothing to offer in the form of liquid capital, let's say.
Yeah, they have nothing to bring to the table. Right. So therefore you're excluded. So episode 69, the unseen advantages of becoming your own banker. Highly recommend go back and listen to that one if you want to expand further on this topic itself. But I think I compared it maybe in that episode, but what comes to mind is, like, think of somebody in your life, like a friend in your life, who, because of that friendship, there was some opportunity created for you that maybe completely changed your life, or maybe played a big part financially or otherwise. Imagine had you never met that person. you wouldn't know what you're missing right now because you never would have met him. You never would have had that opportunity in the first place that came along.
Yeah, that's right.
Right. So it's just like, relationships. Money is the same way. If you had access to capital, you have no idea what opportunities you're missing out on by not having access to your own capital.
Yeah, and that's been our personal story, Dave, in our own like personal relationship, and kind of in
Absolutely.
both directions. It's I always tell people this too. It's like one relationship, or someone sends you a book. He sent it to you for a reason. Read it,
Yeah.
and that will lead, whether you know it or not. You don't know it right now, but it will lead to other things. We all started somewhere, right? We started at zero, and now, you know, hundreds of clients later in a short amount of time, here we are.
Yeah. And that's the kind of stuff you can't put on a piece of paper and slide it across the desk and show people.
Nope.
Like, hey, here's all the opportunities that are going to come your way when you start doing this. You can't do that because it'd probably be unethical because you can't tell the future. But we can
That's
sit
right.
here and guarantee you that opportunities will come along that you otherwise would never have had the chance to participate in if you don't have access to capital,
Yeah. And
or
and not necessarily through us or people we know. You're going to see your own opportunities. You're going to create your own opportunities,
yeah,
whether it's financing something as Nelson intended, including your in investment, or buying land from your cash-strapped friend who needs the money,
yeah.
but at pennies on the dollar, and then selling it and taking your entire family to Europe for a month.
I think this would be a really cool thing to compile from our clients, just a list of, hey, what are the opportunities that you've got to partake in because you had access to capital that if you hadn't been doing infinite banking, you would not have had that opportunity. I bet every client would be able to tell us something, at least any client who's been doing this for any amount of time.
Yeah, no question. And including those, Dave, that are just building capital. As I've said, that's doing something.
Yeah, that is doing something. And that's
No
what I did
question.
for the first 6 years of owning
Yep.
policies is I just accumulated capital. That's it. But it created an opportunity 6 years later when I wanted to transition careers and flip a house and do all this kind of stuff without really putting my family out or putting my family's well-being at risk. I was able to do
Sure.
it. So
That's right.
yeah. So go back, listen to episode 69. We'll put it in the show notes. um and then last but not least, what's one of the most important things that infinite banking utilizing properly designed whole life insurance provides and creates for
Creates a
everybody?
like creates a legacy.
Yeah, absolutely.
And not to be confused with, like trust fund baby. That's that's not what we're talking about. And we've talked about this before for sure. Um, but when you look at your own families, and we've all had loved ones that have graduated and moved on, and what would have life had looked like had that generation practiced the infinite banking concept, had the right mentorship to buy the right product, structured the right way. I know personally, there's some members of my family that could have used that influx
Yeah,
for, whether a sick family member or just whatever. Why not?
yeah.
Um, but so again, that gets back to that cost, the cost of not doing this. And maybe you don't care about your legacy, in which case you're probably not our people, and that's fine.
You're not.
Or it's that's okay.
I think a lot of people don't look at this right. They only look at it through one lens of, well, I don't want to, just give my kids a bunch of money and make life too easy for them, which I agree. I
No
agree with
question.
that. But if that's the only thing you're thinking, what about if you have, what if one of your grandchildren, after you graduate, one of your kids has a kid who's got special needs and needs a lot of special care? Like, wouldn't it be cool to have that money available in a trust somewhere to provide for that grandchild of yours and to make
Yeah.
your kids' lives more um, enjoyable because they have the means to provide for their own kids? Emergencies for any family member or opportunities for family members to go out and do something. Like, I don't think we're called to give our kids anything. We're called, in my opinion, to provide opportunities for those people in our lives.
Yeah, that's right. I love that. The future is unknown, folks. It's so obvious that it's an obvious statement, but really think about it. You don't know, the situation Dave just explained, applies to my family on both sides. And I could tell you, life would be different had, so anyway, not to get too personal, but things do happen, right? And
yeah,
we don't know.
Tragedies are going to occur.
They're going to occur.
Yeah, almost as if the future is unknown.
Yep.
Right? Wouldn't it be cool to at least have the financial backing to weather those tragedies? Of course, there's the emotional aspect and everything else, but boy, if you got the finances to handle it, that sure takes a load off.
No,
right?
No question, because that is going to be, if not the biggest stressor, it's going to be the second
for sure
stressor in that situation, right?
Yep, so. Absolutely. Yeah. Well, so there you go. There's the cost of doing IBC, but then there's the cost of not doing it. So I think that goes with any decision you make in life. What's the cost of doing this? What's the cost of not doing it? You got to explore both sides. And if you can make a list and the costs of not doing something outweigh the cost of doing it, I think you've got the decision made for you.
Yep, that's right. And the true understanding comes, do you look at your premiums as a cost, Dave?
Absolutely not, man. I just paid a premium on a policy for my stepson, 100% base.
Yeah.
I didn't even add any paid up additions, 100% base. Yep. And I'm happy to do it.
Yep.
When I saw that taken out, I was like, boom, good. Here we go.
Yep. That's going to be a great policy and serve him very well later in life.
It's going to serve me very well later in life. And him too, if I decide to give it to him, right? Yeah. But it could just serve me very well for the remainder of my life and then pass it on to him as something that's going to be amazing for him.
That's right.
So,
and knowing what a cheapskate Dave is, that's probably his intent.
I like to call it financially responsible. Hey, Paul, check this out. I just checked our iTunes.
100 reviews?
100 ratings, not reviews. We got 100 ratings exactly. So from the episode that came out today, I guess, right? So we record about a week prior.
Yeah.
So we talked about that. So whoever did that, whoever made a review on Monday, September 25th, prior to 5 p.m. Central Time, thank you. Tell us who you are, because you made our 100th rating. That is.
Man.
So, pretty cool.
Maybe we'll send you a hat or something.
Yeah, we need to get some merch.
Get some merch.
Yeah.
And not the cheap cotton shirts. Like, this is a nice one. This is nice. It's a blend. It's really one of those soft shirts. That's why I bought it.
Yeah. Nice. You wear it as a nightie? You sleep
I wore it to work today to like show off my new Tennessee roots.
Yeah. But you got a lot of jealous people around there knowing that you're retiring in a year and moving on with life.
Oh gosh. Well, you'd be surprised. A lot of people like it here. I think they're out of their minds, but God bless them. I have some clients that really like it here. I love you. God bless you.
We got one right down the street. So
we do. I gotta go meet him.
Talking to him this week.
He's actually
he just got
literally
approved.
Lives in the same neighborhood.
Yeah, that's hilarious. He just got approved, and we're finalizing things this week.
You should check the policy, have it delivered to the house. I'll go bring it over there.
Hey, that'd be funny. No, I already did electronic requirements like you told me to. But yeah, that'd be hilarious. Yeah, with your briefcase.
With a briefcase? I don't have to go get a briefcase.
Yeah. Well, cool. All right, everybody. Well, hey, thanks. Keep the reviews coming in. We love hearing them. Keep the questions coming in. And if you're a client and you've got
like a story to tell.
A story to tell.
And we do. We do have clients.
Yeah, if you're listening, you got an opportunity that you'd like us to share with the listeners on an opportunity that you created because you had access to capital. Please share it with us, and we'll tell everybody. We'll tell the whole world about it because there's plenty of them out there, and I want to share them.
Yep. Like if you're in Hawaii, I've got a client that whitens teeth. Started his business, quit his W-2. Great success story.
Oh, that's awesome.
And he does a great job. I'm pretty sure he does the NCIS people.
Really?
Yeah, it literally whitens their teeth for the show.
NCIS Hawaii. Nice.
Yep.
That's cool. All right.
Yep.
Well, good. Well, until next week, everybody, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.